Good afternoon. Welcome to OptionsTender. Actually, good morning. It is Wednesday, June 11th, 2025. We're going to go through the divergences on all of the big tech, talk about those just a little bit, and then we'll go through our other indicators rapidly so we can get through this. We already know what we're looking for. We didn't get a real pop today for CPI. And so that's what we were kind of, at risk. That's what we were worried about, risking on the shorts. Now, in my opinion, we do have PPI, but PPI tends to do the opposite of CPI. So you get our pop today and possibly our drop tomorrow. If today even stays green, I don't know. We'll see. We have a bunch of divergences loading up, and you can't really time off of that, but it's a condition where we're looking for a reversal and, in my opinion, a second top. Okay, so let's jump into it. We're going to start off with SPY and we'll go around the horn. Magnificent 7. We're doing this intraday at 11:30 a.m. Eastern Standard Time. If you want to get these videos intraday, consider becoming a 99-cent a month YouTube supporter. It's a membership that comes with the Discord and trade alerts. And we had a trade out today on Tesla. It was a theoretical trade, highly probable, and if it works out, it's going to be a banger. So I'll post that video up top if you're interested. Those are $4.99 a month members. That gets the after we do a trade, I do a video on the targets and why I picked the strike price and all of those things to kind of help people learn how they can choose their setup and trade. You know, you don't have to do the same setups I do. I have multiple setups that I look for, and this is a really good one. So here we go. We have SPY. Here's our divergences. I just did the near term because this was our top here. And yes, I'm fully transparent. I was calling tops. I was calling a top here. I called a top here, and I called a top here. Were they right? One time they were. Okay. We saw price action here was our peak, and we got a correction off of it because we're deeply overbought, and we had our correction, and we actually had a little divergence here. If you see our peak candle was right here for RSI, but our peak in price was actually right here with a lower high in RSI. So there was a slight divergence right there. And then after correcting and not getting a real impulse, it looked like it could have been nesting. And then it actually broke a high here, which confirmed that this was a corrective move. And we had a new peak, but it was a lower high from this one. So now we started to create divergence. Now we had a setup for another, well, in this case, correction, but it could have been the top there as well. Now, price in the MACD made a divergent high here, but price just barely eked out a new high from that point, but it did not make a new high from here. But it also made a lower high in the RSI. So you had that three peak setup there. That's what they call it. That's what traders call it. Three peak divergence, and peak, and new highs each time. So that was a clear setup in hindsight, right? You never know what price is going to do. And then it gave us our tariff crash. And in the near term, we have our peak here. All right. Our nice high in the RSI and the MACD. And we're going sideways to lower on the MACD, but making new highs on price. Okay. So this is giving us a signal that at minimum, we're going to look for a correction. All right. It doesn't have to be a big crash. I just think we're peaking, and we have tons of other reasons why I think that, we're at a new top here. Even if we eked out a new high, get a new high, it's still, in my opinion, that's just going to give us a monthly divergence. and that we're going to roll over. And that would even, to me, that would be even more bearish if we made a new high there directly from this move here and not getting a new low. Now, this, to me, a confirmation below this low here would give us that a peak is in. Okay, so that's the divergences. Now we'll just kind of zoom through all of them and show you that many products are getting those divergences as well. So let's start off with the VIX. Big divergence in the VIX. Here, I'll actually use these arrows here. We had a low, now we're making a lower low, and we're on the last day. We are on the last day of this cycle bracket. Possible low here from June 5th. Give yourself about 3-4 days. We're on the 4th day, trading day of this low period. So going into PPI tomorrow, that's a great setup for a low to be in. Okay, so that's a positive divergence. We have the Magnificent Seven. Sorry, it's my dog barking. Magnificent Seven. Negative divergence. Apple doesn't have one, but Apple's getting real tight here and is actually breaking a potential trend line here and curling under with the 8 EMA as well. Amazon Amazon did not make a negative divergence here on the MACD. I'm looking at about 5.4 is the high. So we made a new high here, but we made a lower high on RSI. And you can call that a Class B divergence where it's just about equal peaks. Okay, Tesla, we had a trade on this. The obvious on this is just a test of the 20 moving average there. Meta made a new high, negative divergence on the RSIs here. So you don't have to have negative divergence on both of them, but having both confirm the same thing is always nice. So negative divergence on NVIDIA. We actually have a 3-peak setup here. And, if this starts to grind higher and continue, maybe pops, a new high and makes a new high in the RSI, it can continue to do that. It's just, this is a condition. This is a good setup, but you got to give yourself some time on these. We took a pop here and clearly that didn't work out. It did for a moment. If you took, I don't remember if we did or not, if we took profit on that, and then here we're taking another pop at it again. Google made a new high, made a new high. We have no divergence on Google. The only setup we have here is that possibly if we trade back under this line, it's trying to hold this possible bear flag. Microsoft, big divergence there as well, both indices, or both indicators. QQQ, negative divergence. SMH, negative divergence. IWM, divergence on the MACD, not on the RSI. DIA, negative divergence. Okay, so just want to run through those real quick, and now we can do our regular. You can play this at 1.5 speeds or 2.0, whatever you want, just to get through this quickly. I added on a new line here just in case. This peak here, just a geometric line to see how that holds. So far it's holding. We'll see how that goes. And McClellan oscillator. Well, first of all, the moving averages we're holding above. We're in a positive formation here still. McClellan oscillator in the overbought territory. So this is actually a really good setup in itself. We got all the way up to the overbought. When we were down here, we had a slight correction and then almost like a breakout with breadth, right? And we've completely gone nowhere, just grinding to the upside, but breadth is good. As a matter of fact, it's overbought at this point. So we have negative divergences. You can call this a corrective series here, and negative divergence into overbought territory. That's a clear signal that you should be cautious if you're buying into this. At minimum, be cautious. OptionsTender, that's what we just looked at. And we'll look for this slow stochastic to roll over. That would give us a tailwind to the downside. We're already having that. You actually have a green histogram right here. So with that said, once that turns red again, that's a confirmation that that divergence has peaked. Now, you can price-wise, confirmation would be below this low, in my opinion, because you could still have this could be a leading diagonal, and you make a higher low and move on to all-time highs there. All right, and that would be considered an extension. So we're looking at this as a wave 5 for the bears, but if you're a bull, you want to see a higher low here, and that would create a wave 1 instead of 5. 1 of 5 after that, so you'd get wave 2, 3, 4, and 5. DMARC, we know that we had a 9 count, and we had a 9 count here 2 days ago, and we're just grinding a little bit higher. It does happen. We knew that it could. Still heading lower, getting divergences in the awesome oscillator. Money flow, let's go over to SPY, because we don't have volume on SPX. Okay, we have 2 of them. So here's the money flow, and this is fantastic at catching turns. Fantastic, and I love this. It shows the divergences, the distribution. Now we're going a little bit higher right now, clearly with price. So we're getting some money flow. If this decides to go higher and higher into an overbought position and burns this high here, then there's no real setup. It would just be overbought, just a condition, and it doesn't have to have divergence to roll over. But right now, clearly making new highs, but not making new highs on the money flow. So it's a divergence so far. Bollinger Band, it's a perfect setup. Perfect setup. Negative divergence going into the Bollinger Band. That's a sell signal in itself. Awesome oscillator. Wave 3 into wave 5. That's what that's telling me. Excuse me. Okay. Let's go down to the lower time frame. And again, just check out it. I want to do this each and every day because some of you are new and you're learning how to use these indicators. You don't need all of them. You can have your setup that you do. Maybe it's just a breadth indicator and then your MACD, RSI, slow stoch setup. I'm using all of these just to show you. I don't necessarily trade off all of them. Here you go. Okay, so on the lower time frame, we actually made a new peak here, right? So that burned those divergences right there, but it left. You have a little one. You have a little one from that correction there, but it left these two here. So there's a high, a tiny negative divergence that gave this correction, and now a higher high on price and a lower high on RSI. So there's your setup again. Even though we thought it could have happened here, that burned through in the near term. All right, and negative divergence. I'm not sure if it's from that peak to that peak, but we definitely have one from here to here. Okay, DMARC. Still going, but 9913. Do we get a 13 up here? I guess possibly, or another 9. We might get another 9 count here. Going into the end of the day. Awesome oscillator. Let's pull back out here. Negative divergences, as usual. money flow, same thing. Still a divergence from this high to this high, but continued the grind. So money's coming back in, but still forming. If it rolls over now, that's still a divergence there. Okay. And I guess it helps to see, you know, when they play out. So very similar. This situation, you had your peak up here, just like our peak here. In the near term, it made a negative divergence, gave a little sideways correction, and then made a new peak, but a lower high here. And that's potentially what this is right now. Bollinger Band getting real tight. Again, another sell setup. Had the sell setup here and here, did it really happen? You could argue just sideways in time. Here's another sell setup here. All right, with negative divergence on both time frames, looking really good. Elliott oscillator gave us a peak, another peak into this, and then another peak. So, you know, wave 3 into wave 5, wave 3 into wave 5 of lesser degree. So there you go. That's what we got for you guys. Just a small recap. We're looking for this to roll over to peak here as a wave 5, and we're looking for an impulse 1, 2. I don't know where those are going to be. It could be a nesting, could be 1, 2, 1, 2. And then alternate scenario here is, this one I think is kind of out of it now. This could have been a 1, 2, 1, 2. We get the catalyst and this rips to the upside. I think that's less likely now. I think this is it, our 5-wave move into a in this scenario, and I don't think this is really the case, but we have to keep this in mind because we don't know what price is going to do. So I think this is a 5-wave move. In a bullish scenario, this will be a wave 1. Get these out of here. And this will be a wave 2 pullback. And I have to adjust this pullback, this retracement fib with the new high here. So if it makes another high, I have to move it up. So with this move here, that would be a leading diagonal. This is either an ending diagonal for the bearish scenario or a leading diagonal. And with the information that's given to us, and when we reverse, not if, when we reverse, we're going to get a possible wave 2 into, here's the golden pocket. It could retrace a little lower, but no confirmation until you break this low of the bearish scenario. So you could come all the way down here, a penny above, and get your 3rd wave, 4th, and 5th wave up to probably all-time highs there. But if we break this low, that's our confirmation that our bearish scenario is playing out, and it invalidates a 1, 2. Okay, hope that helps you guys. Have a wonderful day, and we will check back tomorrow. Don't forget to like and subscribe.